Hi everyone, Don Singletary, and today I've got some great news for you. You ever notice when you're trading, if you're down $100, it feels like you're down $900 to $1,000. The fear is very disproportionate to the amount, and that's the way our human brains work. You know, I say trading happens between the ears, so today I'm going to give you 3 powerful tools so you can help be aware and avoid that fear of losing money that has you making very irrational decisions. These are hardcore things that you can institute in your trading. And also today, I'm going to show you how to use practice trading so you can make better decisions when real money is on the line. I'll have that and more coming right up today. Once upon a time, there's an Israeli scientist named Daniel Kahneman. In 2002, he was awarded a Nobel-sponsored prize when he came up with something called prospect theory. Now, we may not know it by that name, but we're very familiar with the prospect theory. Say you have a trade and you're up $100 in the trade in just a few minutes. Well, nobody is afraid to make money. You're very, very comfortable. You're rational. You're thinking. You're able to manage the money and control the risk pretty easily. But when you're down $100 in a trade, things go topsy-turvy for trading psychology, because that fear of losing your money kicks in. It's a natural aversion to loss that is built into our human brains, and things change dramatically. Here's how. Now, the amount of money on the left side and the right side of this chart is the same. It's $100, no more, no less in either instance. Yet your entire trading psychology changes. You know, when you're up $100, you feel good, your confidence is intact, you can make all the concerted effort you need to make a deliberative, conscious decision, and probably it's a lot easier to do the right thing and to manage the trade. On the other hand, when you're down on a trade, your memory kicks in. You start creating stories to explain how you got into this mess. You may be thinking, I didn't mean to let my trade get this far out of hand. You resort to hope, which is not a trading strategy, and you look for reasons. You look to find out that, try to believe you didn't make that big a mistake to let this loss sneak up on you, and now you have it to manage, and the worse it gets, the worse you get at handling it. It's just a very, very difficult situation. But the thing that's most important about this diagram, and the reason I put it up today, was you have to be aware that being down money makes you very, very prone to irrational decisions. Traders will tell you this is one of the hardest parts of trading. You have to remember, you're only going to win about 60% of your trades, and you're going to lose 40%. And if you don't learn how to handle yourself during those trades where you have losses, and you will have losses, then you haven't really learned to trade. It's really ironic, but when you're down, say, $20 or $30 in a trade, and you think, oh, this is bad, and you start having a hard time with it, and if you let those losses run up to $80, $90, $100, your brain just goes absolutely wild. It's not 3 times worse than being down $30. It's 10 times worse. If you've been there, you understand exactly what I'm talking about. And the more you allow those losses to run, the worse it's going to get. Once in a while, it'll turn around on you, but most of the time, you're going to get caught in your own trap because you haven't nipped in the bud those losses that are going to happen. I mean, think about it. In this type of day trading, the stock index futures, you cannot win 90 to 95% of the time. It's just not in the cards. It's like playing blackjack in the casino and expecting to get to a 90% win rate. The odds are not there. It's just not going to happen. The sooner you come to terms with that, the better off you're going to be, because you have to learn to stop those losses before they get to an uncontrollable level that has you making irrational decisions, which just compounds and makes it worse. Okay, maybe you're thinking to yourself right now, all right, I know what the problem is, but what the hell are we going to do about it? Well, I'm going to lay out 3 things for you in a minute, and I think they're all 3 going to be very helpful to help you avoid these losses that infiltrate our trading. and have us making bad decisions. First of all, I need your help. I'll do this very quickly. I appreciate it if you hit the like button, because that's a vote that you want to see more videos like the one you're looking at today. And that is easy, and it helps me decide which videos to make next on the channel. Thank you. There's a very important concept that you have to understand. Just because you're in a losing trade, you have a bad trade that's going to be 40% of your trades, it doesn't mean you were bad. It doesn't mean you did anything wrong. You didn't turn stupid overnight. I mean, you still have all your tools there, but you just have to recognize that it's how you handle these trades that maybe you shouldn't have been in to begin with. One way, of course, is not over trading. I think that's one of the biggest rookie mistakes. The first one, I think, is being obsessed with making money instead of being obsessed with rule number one. And secondly is taking all these trades that you shouldn't be taking. Most of the time, you're not going to be doing any trading. But nobody tells you that when they're slinging $100 bills off the balcony, telling you they're making $5,000 before lunch. I mean, you gotta make it real, friend. And that's not how this kind of trade happens. Professional traders are obsessed with avoiding risk, and you have to be that too. Over 30 years ago, I had a mentor that was helping me learn to trade commodity and commodity options. And he was really a genius of a guy and very, very good at everything he did. And Phil told me once when I came to him and I said, Phil, I'm trading 25, 30 trades a week in 4 or 5 different markets. And, you know, I'm doing this for a while. I'm not losing a lot of money, but I'm not making any money. I think I'd be better off if I just traded maybe instead of 25 or 30 times a week just to trade 3 or 4 times a week. I'd make twice the money. And he looked at me, being a genius, and he said, well, why don't you do that? And that was great advice. Now, you got to remember, when you're looking for trades, you're not on an Easter egg hunt. You're looking for a golden egg, one that you can get a ride on that's going to make you some cash. It's a lot more fun keeping your money than it is just trying to keep busy. My sons once asked me while I was trading what I was doing, and I explained it to them, and when I was done, they said, oh, it's like a video game. I said, well, there's a huge difference. I said, when you die in a video game, you hit the reset button. When you die in trading, you lose money. And that's a huge difference. And the number one thing that most people can do, you're running your own business here. It's very serious. And the number one thing you can do to improve your results is to turn up the quality, turn down the quantity. So be very selective about those trades. If you do, you'll get to stay on this side of the ledger where the waters are calm, it's smooth sailing, and you're in control, and less time on the other side. Getting that handle on quality control will help your trading a tremendous amount. Next thing is a stop loss competency. It's a term I kind of created because it's not enough just to have a stop loss. You have to know how to use it and when to use it. It's not the tools in the carpenter's toolbox that makes him skillful. It's the way he learns to use them properly. And stop loss competency is something we do a lot of, especially with the live trades here on the channel. So look for that live trades playlist down below for more information on that. It's very important. There's a very, very bad practice that happens a lot in trading. It happens to new traders, certainly, and it also happens to many existing traders. In fact, some of them try for years to learn how to trade and they can't do it. And one of the reasons for that, one of the major reasons, is what I call hopscotching. You change an indicator here, you add a new RSI, you get a Bollinger Band here, you change the interval of your candlesticks, you change from candlesticks to bar charts and back. You get the idea. You're hopscotching from one idea to another, thinking that all of a sudden just putting that into your trading plan is going to improve it greatly. And that's taking a lot of risk. Your trading plan is how you run your business. It's your domain, and you do not let any stray idea enter your trading plan to try to improve your trading unless you vetted it first. And by that, I mean go to the practice trade mode. If you must change your configuration and your indicators, then you be the boss. You make that indicator or that slightest little change, you make it earn its way into your trading domain and your trading strategy. You don't just experiment with your money. That's bad business. When you let one guy waving $100 bills or an article or something you read or a post on Reddit change the entire way you trade, and you do it all the time, you'll never, ever learn how to be successful at trading. Not unless you get incredibly lucky. Every trader is different. You must be vigilant. Be the meanest junkyard dog in the fence. Guard your confidence. Guard your account balance. Guard the way that you trade. We're all unique, and you have to learn what works for you and play to your own strengths and avoid your own weaknesses. If you want to see more videos like the one you're watching right now, be sure and hit that like button. That helps me decide what to make the new videos on. And also be sure and subscribe to the channel and hit the notification bell so you won't miss the new video announcements when they come out just about every week. One thing about this trade quality control, stop loss, competency, and consistency, when you tune into my channel on YouTube, you don't see a different method in every video. You don't see a different trading screen. You must have consistency to learn, and that's why I use that setup in Tastyworks. I looked at a lot of software, and it's the one I decided would be best and easiest and fastest for beginners to be able to learn to trade the new Micro Eminis. My affiliate link to apply for a Tastyworks account is in the text below this video. Look for the word broker down there. And I want to tell you about the CME Trade Simulation, and you could use it right now. It's available immediately, no credit cards or anything. You just sign up for a free account, and you have this trade simulator. As you can see, it looks a lot like the Tastyworks software that I use here on the channel. So if you're new to the channel, check out the beginners playlist below. Make an application for your Tastyworks account. You don't have to fund it right away, but you can make that application and then go to the CME Trade Simulator and try out the ideas you see here on the channel. And finally, when you get ready to fund your account and you ask for the works type of account when you do the application to Tastyworks, and that way they'll process everything you need to be able to day trade the Micro E-minis. Ask for the works for the account type there. So that's it. Make the application to Tastyworks with the link below. Go straight to the CME Trade Simulator. The link is down below this video, and you'll be trading in about 5 minutes. And no credit cards required to sign up for that or anything like that. And then when you get ready to go live with real money, you can activate and fund your Tastyworks account, and you'll be able to trade there. If you'd like to get off to a fast and easy start to learn to trade futures, my introduction to day trading the micro futures has been read by thousands. It has everything you need all in one place, and that saves you time with this valuable information. Thank you. If you found some useful things in the video today, be sure and subscribe to the channel so you won't miss the new videos. We're out of time today. I'm Don Singletary. It's been fun. I hope every day is a payday for you. And thank you.